Hey, this is Katie, and I want to share with you how I was able to purchase a home making only $20,000 a year. At the time, I was young, I was in my early 20s, and I was also a single parent. Rent prices are really high right now in a lot of the areas of the country. Sometimes it makes more sense to buy a house. In this video, I'm not going to go into whether you should buy a house or not. I'm just going to tell you how I did it after I had decided that I should purchase a house, that it was going to be in my best financial interest. So when you go and apply for a loan, the banks are going to look at three main things. They're going to look at your income, your debt to income ratio, and your credit score. Because my income was so low, I did not qualify for a traditional home loan, but I did qualify for an FHA loan. And what the FHA loan is by the Federal Housing Administration. It's a government program where the government actually insures your loan so that more people will qualify for a home loan through the FHA. It's for people who have a lower income or maybe have a lower credit score or haven't had great credit or financial situations in the past, but that have established themselves as improving their financial situation. So in order to qualify for the FHA loan, you need to have a credit score of at least 580 typically. There are exceptions to most of the things that I say, but these are the typical standards. So a credit score of at least 580. You can have had a bankruptcy and a foreclosure in the past, but you have to have good reestablished credit. They are also going to look at your debt to income ratio, and there's two different types of debt to income ratio. One is a front end and one is the back end. And the front end is your mortgage payment, including your insurance and property taxes. And that needs to be around 31%. And then the back end includes all of your debt, including credit cards, student loans, car notes, anything like that. And that needs to be typically between 43 and 50%. A benefit of the FHA loan is the down payment is usually a lot less than a traditional loan. Usually it's around 3.5%, but there are grants that will lower that even more. I actually had a 0% down payment on my purchase. With an FHA loan, there's also an option to get a 203K renovation loan, which is what I did. And what that is it'll give you, the renovation loan will give you extra money to make certain renovations to the house. And when they calculate the value of the house, it's after the renovations are complete. So if you purchase a house for $60,000 and the house after your proposed renovations is going to be valued at $100,000, then you would be able to get a loan for $100,000 if you qualified for a loan in that amount. Specifically in my situation, because I made such a low income, the way that I was really able to get and qualify for the FHA loan is because my debt to income ratio was really low. I had no other debt when I went to go purchase my house, so my debt to income ratio met the qualifications since I didn't have any other debt. I also had a little bit of money in savings. Even though I didn't have a down payment, the bank liked to see that I had saved money, I had a little bit of a cushion, and that I was financially responsible enough to be able to save money. And it's just smart to have money saved because when you do own a home, something might go wrong. Your air conditioning might break a month into the purchase and you might need to replace your air conditioning, or something could always go wrong after you close on your house. So it's smart to have savings whether or not the bank requires it. Another thing I did was I found my house, it was a foreclosure. So I got a really good deal on a house that looked pretty ugly initially. I saw there was a lot of potential in it, and I knew that after the renovations, the house was going to be nice. But because the house was pretty ugly when I initially purchased it, it was structurally sound, and the layout, the floor plan was nice. It was on an acre. It was in a nice area. But I got a really good deal on it because cosmetically it was pretty shabby. When I went to purchase my house, I didn't only look at it as a living space, but also an investment property. And I bought it about 6 years ago, and at this time I have at least $50,000 of equity in the house because I've been doing some other minor renovations over the past few years just to increase the value of the house. So not only have I been living in this house for a few years, but I've also earned some equity. So when you go to purchase a home, do consider it an investment, and maybe you can make a little bit of money on it also. So thank you guys for watching. Let me know if you have any questions about anything that I've said or any other advice you want to throw out there. Hopefully this will be helpful for you, and if you're considering looking into purchasing a home, if rent seems too expensive and you think that you might qualify for the FHA loan, definitely look into it because it has been a really good choice that I have made in purchasing a home versus renting. I've saved so much money, plus I have lots of equity in my house now.